Well, thank you very much for joining us on a Tuesday. I'm Marlon Bowling with an eye on your ag commodity trade. We'll begin by taking a look at our grain trade in Chicago. Let's go ahead and go to the corn board and check our latest quotes. On the March contract, we are firmer across the board here. By the way, we have the March 2 3/4 higher right now at 361.5. And now you have your May contract up 2.5 cents. Your July up 2.5 as well at 377.5, only 2 ticks off of our high of the day. And if you look at December new crop corn, we're at 393.25. That's up 1 3/4 cents on the day. It continues to just kind of edge upward toward that $4 benchmark a little more every day, the way it seems. And we wanted to point out we also had an overnight sale of corn announced by USDA overnight. It was a batch of corn sold to Spain. It turned out to be for the current marketing year, and it was 132,000 metric tons. On the soybean side of things, on the soybeans, we have firmed up there as well. We are now 6 higher. Last trade, 997.5 on the March contract. We have July up 6 at 1018.5, and the biggest movers of the day by far are the wheat markets. And looking at Chicago wheat, we have March now 5 3/4 higher at 455, July up 7 at 481.5, but Kansas City wheat is like it's in its own orbit here today. We have March now 15 higher, 468 per bushel, and July 13 higher now at 497, within a penny of its high of the day. Meanwhile, Minneapolis wheat on the March contract is 2.5 higher. We have July 4 higher at 635.25. Let's go to the trading floor in Chicago and visit with Todd Bubba Horwitz of BubbaTrading.com. The wheat market on fire today. Kansas City leading the way here.
Good morning, Marlon. No surprise, you know, if you were listening to RFD TV, you knew that we thought wheat was going a lot higher, and here it is, right? Look, the market's starting to come out of the equity markets. The money is going into the grain markets, and we've seen that the last couple of days. Wheat is going crazy. We're up from 410 to 455, 460 now. Soybeans broke over that 985 level we've been watching, and corn, as we continue to say, is going to look to go higher, and here we are. We now look like we're breaking out to new levels. I mean, I thought we'd see a little bit of a pause here, but now we're moving to new levels. Now, I would not be surprised to see a small bit of selling pressure here, but again, I'm looking to be still a buyer. I think we're going much higher from here.
So do you think the large commodity funds are kind of over a barrel and having to cry uncle here at this point on the wheat? They've been heavily net short, right?
Or one put on a banana peel and the other one, yeah, that's what I think. I think they're in some trouble here, and I think they're going to create this short squeeze, and I think the buying's only just begun. And again, there could be one more stab from them to push down, and certainly the technical levels would suggest a possible small sell-off here, but I think they then start to go higher again, and I would look to be a buyer on any dip here, and which is why I wanted everybody to store their grains as well without selling them.
You know, sometimes when you start to see a dead market like the wheat has been for 2 or 3 years, when it starts to show signs of life, a lot of times that will kind of activate the export demand as well, as foreign buyers think, well, maybe it's going to go higher. Maybe we better grab some while we can. Do you think that could happen here?
Absolutely. You know, it wasn't that long ago, Marlon, that we were almost at $6 a week, and it's within the last year that we were there. So, you know, again, now at 455, 460 looks like one heck of a bargain. So you would certainly possibly see some people now step in for some exports saying, hey, this market's starting to get away from us. Maybe there's going to be some weather problems. Whatever reason, there's now some buying excitement. And with money coming out of the equity markets, that'll even make more excitement for these markets and push them even higher.
How much upside remains potentially in the corn and beans?
Oh, I don't know. I think we're going back to over $4 corn. So I think, and beans are still tricky. But if beans hold 985, I would not be surprised to see 1050 with pretty much ease. Again, there's a lot of factors at play here, but the biggest factor in play right now is the equity markets. If they're going to continue this sell-off, which are down about 300 when I came up here, that money's got to go somewhere, and the best value in town has been the grain market, and it still is for right now.
All right, a quick peek at our cotton market right now. We'll take a look at that March contract. Get everybody updated. It's down 48 points. Wow, 77.88 per pound now. The new crop December down 26. Still narrowing up that spread. The December at 74.65 right now. Todd will bring you back, and we will talk about the cattle and hog markets in just a moment. Don't go anywhere. We'll be right back. Well, Well, we were just showing the crude oil market and also the dollar value today. And Todd Bubba Horwitz was talking earlier about the fact that we had a big drop in the value of the stock market index this morning. And of course, a lot of folks were waiting for a correction. Indeed, we're really getting a correction yesterday and today. The crude oil market, oddly enough, is following suit, and so is the dollar. If we can pull those back up one more time here, we have the crude down $1.21 at 64.35 a barrel now on the West Texas crude. Let's take a look at that dollar value too, if we can. March futures down 160 points right now at 88.970, and that is significant because we have noticed a little bit of an uptick in some interest from foreign buyers on ag commodities. We bring back in Todd Bubba Horwitz, BubbaTrading.com. He's located in Chicago, and he rejoins our conversation right now. So a quick thought here on this dollar value, the way it is right now. Do you see more downside here?
Nah, well, this is totally part of the currency wars right now. This is the Fed trying to control interest rates. You know, there's a Fed meeting tomorrow, and interest rates are going crazy. They're at 4-year highs right now, and the only way they control it right now is by keeping pressure on the dollar. So we could give a little bit more room on the downside, but I would look for a rubber band rebound on this dollar, and I think it's going to take off to the upside as well, along with everything else. Again, this has been a manipulated play anyways, and now that it's starting to come to an end, you're going to see some pretty big moves because that money's going to have to move somewhere, and I think we see a big spring here.
Okay, on the livestock trade, let's go to the live cattle market and see if we've moved very much. Right now, we are definitely moving to the downside here. We have February live cattle now down $1.78 at 123.92. We have April down $1.92 at 123.08. If you look at the feeder cattle trade here today, let's take a closer look. March down 188 at 145.12. We have April down $1.60 at 145.70. On the lean hog markets as they stand at the moment, we have February down 8 cents at 72.32, but the April making a big move to the downside now, down $1.17 at 72.25. So how is it that the grains are reacting positively today and the livestock trade really heading south in a big way today?
Well, remember, Marlon, a lot of things was already priced in. I mean, cattle had made a very big move from the bottom, and I'm not surprised at all about cattle. I think that I'm a buyer of fats at about 121, and I'm a buyer of feeders at about 144. So I'm looking for them to come lower. I thought yesterday they'd be a lower based on that neutral cattle on feed report on Friday. So to me, no surprise, they're coming down, and they're going to give us a chance to buy them. I think they will go higher, but remember, grains were dormant for quite a while, and now they just finally taken off. Cattle had been flying, and we have, you know, the fats had come up from originally 104. So again, I think we're looking for a little bit of pullback to buy. And of course, hogs are now getting closer to my buy side target basis April, which is 70. And I would think that we're going to see that target, and then I'd be willing to step in here. So the overall in the meats, I'm very bullish, but I have to see some more pullback before I want to step in because I know it's in there, and you're going to see some of this money come out because a lot flowed in early. So now you see a little profit taking, and then once we get down with that, boom, we go up to the upside, I think.
All right. Well, thanks for explaining all the support and resistance levels for us. Appreciate that very much, Todd. We'll talk with you again soon. Todd Bubba Horwitz happens to be with BubbaTrading.com, and he is located in Chicago. So all the bearishness gathered up on the livestock side right now.
All right. We'll keep watching it. Thank you, Markets Editor Marlon Bowling.